Okay, we're going to examine the yield curve right now. Okay, we got it started. What we're looking at here is a very flat yield curve. Uh, it's running in around 4.65, 4.7%, but the long end of the yield curve is almost the same as the short end of the yield curve. Now, this is back in 2006, around September. And if you notice what's happening right now, the yield curve is actually inverting, where the short-term treasury rate is higher than the long-term treasury rate. So it's an inverted yield curve. And it's very flat, extremely flat. But it's normalized. It's up around, it's more normalized than it is now. It's up around 4.65% across the board between short-term and long-term. Even the 30-year is only slightly higher. Now, if you notice in around June and July of 2007, it's very, very flat. And it has been just before the financial crisis. Now the financial crisis is on right is on in around here around 2008, and you notice what's happening. What's happening is they're lowering interest rates, but not so much the long end of the curve. They're lowering the short-term rate. You see it lowering? See it dropping? The short term on the end it's down below 2%. Now it's down, heading toward only 1% or whatever in around April or May of 2008. That's where we're at right now. And the short term, now what you have is not a flat it's not a flat yield curve anymore. Now you have a short-term rate that's there. Look, dipped down to zero, and look, it's down. It's on the short end, it's dipping down around zero. All right, and on the long end, it's up around 2.5 or so, and maybe 3%. And see, it's staying down really low. 2009, we're at right now, and now we're in April of 2009. And you see, the short end is almost down near zero, and the long end is up around 4.65% in 2009. See, so we still have a normalized rate on the long end. It's still up around 4.6%. It's the short end that's down around zero. And now we're into October of 2009. And you see it staying down around zero on the short term, 3 months and the overnight rate. And you take a look at the long end, though. Still way up around 4.65%. So it's more normal for the 20 and 30 year. You know, so now we're in April and May of 2010. See, and still, the short end is down around zero, but look at the long end. It's still a reasonably higher rate. It's starting to get a bit lower now, though, on the long end. And so what's happening is the yield curve is starting to, as that rate starts to flatten. You get a flatter yield curve, but it's still up around 4.65%, even in February of 2011. That's where we're at now. Now we're in March of 2011, and you notice it's still not a flat yield curve. May of 2011, and we're still looking at the long end of the curve being up around 4.6 or 4.5%. And now it's dipping a little bit, and we're in September of 2011. And now look, now the yield curve's starting to flatten a little bit here. But the short-term rate is still down around zero. You notice that? In fact, it's right on 0%. But the long end of the curve, around 30-year, and the 30-year bond is up around 3% or more. And so we have a fair, not a real flat yield curve, but now it's starting to flatten. Now it's starting to flatten in June of 2012. The long end is coming down around 2.3%, and the short end has went up a little bit, and that's when the Fed started to raise rates. You notice in October of 2012. You notice they've already had a rate hike, evidently, and so the rate is not zero anymore. It's up a little bit on the short end, but the long end, you notice it's up around 3%. So it's a reasonably flat yield curve there. Now, We're into April of 2013. And the long end is up around 3%, and the short end is still, I think it was, what, 25 basis points, if I'm memory serves me correctly. And, oh, look at there. In September of 2013, the long end went up a little bit higher. It went up more like it is now on the long end. December 2013 is what we're up to now. January of 2014, so we're getting up closer to where we are now. And on the long end, we're looking at about the same rate we have right now. But on the short end, it's down near zero, or 25 basis points. And so evidently it stayed that way for quite a long time. In June of 2014 is where we're up to now. So we're getting up closer. August of 2014. September of 2014. October of 2014. A little bit flatter yield curve here. In November. December. Okay, we're in January of 2015, and we're getting a really flat yield curve. The long end is coming down around 2.32%. And the short end, the short end though is still down around still really low. It's down near zero. I think it was at 25 basis points or something. Okay, and now we're into July of 2015, August of 2015, September of 2015, October of 2015, November of 2015, December of 2015, January of 2016, February, March of 2016. Now you notice the short ends went up some. We get a higher short end now. And the long end has come down some. This is getting to be a fairly flat yield curve. Flattening yield curve. Now in July 2016. Now I paused it here in July of 2016 because this is the point I believe that the flow of money changed direction. Was at this point right here, and this is when we were at about our lowest on the long end. We were really low on the 30-year, and on the short end, we were starting to move upwards. So we had a really flat yield curve here in July. But now notice what happens when I start it back up again here. And head into September and October and November and December of this year. Now we're getting close to where we are right now. So I'm going to start it up again any second here and get it going again. Now that we've taken a good look at this. Because this particular piece right here was worth noting. Now you notice that all of a sudden what's going to happen is the long end's going to start to go up again. But the short end's going up too. See? See? The long end's going up, and the short end is traveling upwards as well. So we've got still a flat yield curve because the short end is traveling up with the long end. And so just in the last few days toward the end of this chart is what I really want you to notice, because that's the point when the long end starts to come down and the short end is still going up. See? Because of that last rate hike. So we got quite a flat yield curve right now. I hope you've enjoyed this analysis of the yield curve. Thank you very much for listening. Like and subscribe, and we'll see you in the next article. Bye.